Good morning, it's Harvey Jackson. Just going to get through some news items here. NOPA Crush report disappointed. And China lifts the tariff on pork anti-dumping. So canola has an anti-dumping on tariff with China, so that could give us some hope. March 6th, and the tariff was with Europe, but still gives us some hope that they might actually follow through here. Let's have a look. So NOPA Crush monthly crush, and you can see here that the November high and pulling back. It was actually a pretty strong disappointment that it pulled back as much as it did, and at the same time we actually had this increasing oil stocks. It was thought that it would maybe stay somewhat flat because even with the decreasing crush and increasing oil stocks just means that it wasn't getting used quite as fast as they would expected. Most of the trade analysts anyway. Put this in here just as well. There's 29.3 of the flash sales are actually confirmed of the 12 million. Now there is some I think another 3 million of actual unconfirmed flash sales to unknown destinations, and those unknown destinations could make up, just about all of the another 20% or 25% if they were all China. Now, it's hard to say what it is and who it is yet, but we'll have to see how it all plays out when we get the actual report. Soybean inspections are actually behind even the multiple years pace here. You can see the dark black line. And when you look at corn, actually you're in the upper and beating everything on the export inspections. But when you look at wheat, it's right in the middle. So here's the story. China lowers EU pork tariffs on final ruling after 18-month probe. So it was an anti-dumping probe, and we're March 6th, I believe, is the 18-month probe for the canola. So we'll have to see if that actually plays out as well. And there's a reason I'm showing this here is you see the aluminum trade has been, you're hitting a 3-year high here, and Trump put tariffs on aluminum, and all it did is bring the domestic prices of aluminum up to 3-year highs. It's causing some scrambling going on because they don't have the capacity to produce this themselves. So then it brings me to this Belarus story. If Trump does put a tariff on, Belarus can't supply what Canada can supply on fertilizer as well, especially on the potash. Now, on the nitrogen fertilizer, they can just fire up another plant and get that going, but that takes a couple of years as well. Might be beyond the Trump's term in office as well by the time you get it all fired up. But we'll have to see. India exports defy tariffs, strengthen hand in U.S. trade talks. So because nothing has gotten decided there yet, and their productivity is still going up, which is a good sign. Because tariffs are usually, hey, it hits the country, and then if you can get past that, then you're okay. And it looks like they're maybe getting past it as well. Quick look at the weather. We got this active weather going across here, and you can see in this next slide, the weather is moving quite fast, and then you get another band of storms that's going to hit there on Wednesday. So hopefully I don't get caught in that. Canola is currently up $1.60 at 603, so we hit a lot of our targets at 603. The guys still had their targets in. Rapeseed is down $1.75 at 473.75. Soybean oil down half a penny at 48.93, so we're breaking that trend. Palm oil down as well in sympathy. Crude oil could be the culprit that's leading everything here, really, on all these oils. Are $55 barrel or $55.90 a barrel. Soybeans 10.73. Spring wheat we're $5.69, and your Chicago and your Kansas are down $1.75. Corn is down 3/4 of a penny at 4.47, and the U.S. or the Canadian dollar is at 72.76. Quick look at this market. We still continue trend lower on the canola. Rapeseed, not that same kind of a chart either, but this is giving us to $163 differential between European canola and rapeseed price in Canadian dollars. Anything above this line seems to be finding some exports, but it's too bad that the canola has had to drop to be able to get this into favor. Soybean oil futures 2 days below the 200-day moving average, and it looks like it's still under pressure there. Soybean futures up against the 200-day moving average. So if it breaks that, we'll probably break down lower. Your pivot extension, we're currently trading right at it here at the $55.90 or $56 barrel. Canadian dollar still trading in this range to probably still convert some of the U.S. dollar deficits over to equalize them. It seems like this is going to be at fair value to convert that over. Sure, we can get back to those values, but we've had a pretty long grind going sideways and lower here, and a couple of days past the Fed rate hikes, and we seem to kind of settle where we are now. U.S. dollar index still on its way down. That should be supportive of all the commodities, but it's not holding up. Wheat's the dog, and it continues. Milling wheat, same thing. Here's Chicago corn. Looks like we're breaking that trend line extension as well. We're trading below that. Probably look for some support here, support here, support here if we're going to break down. Quick look at the wheat or meats here, the proteins. Nice recovery into that 50% retracement value up to 61.8 as well. Feeder cattle are just trading at the 50% retracement value of the move. And lean hogs, if this is new news, I would expect a little bit of higher trade as we maybe trade a little bit freer market for pork movement. Couple reports today, U.S. employment, and then on Thursday, CPI data in the U.S. And that should actually be all I have for you today. Take care.